Yes, we can begin.
Friends, first of all, welcome all the participants to this particular webinar. BBF presents a webinar on risk management functionalities introduced by BSE in the equity derivative segment. We really thank our BSE team basically for helping us to organize this webinar for the benefit of our member brokers. There would be a brief presentation by our officials from BSE team and followed by a question answer session. So without taking much time, I would request Ojas Bhai from BSE to please take the lead and share the presentation with our member brokers. Ojas Bhai, over to you.
Thank you, Aditya. First of all, I'd like to thank BBF for organizing this webinar on risk management functionalities in equity derivative segment in such a short notice. So yesterday only we discussed about this webinar because it is beneficial for all the market participants, and they did it in such a short notice. My name is Ojas Shah. I am product head equity derivatives at BSE. It's a pleasure to have the opportunity to share insights with the esteemed market participants. Before delving into the intricacies of risk management functionalities, please allow me to provide a brief background on the recent developments within the BS equity derivatives segment. So I'll request Yunus from BBF to run the presentation, please. First slide, please. So this webinar is being organized on the risk management functionalities which has been introduced by BSE. Why it is important? Because as a risk management tool, it is very crucial for the traders, dealers, and market participants to monitor the risk environment. So BSE has made lot of changes in the risk management framework, and it is very critical for all of them to know about the developments that has happened on the risk management side. So before we start the presentation, I'll give a brief on BSE. What has happened in BSE in last 1 year? Next slide. So BSE has relaunched equity derivative segment and has relaunched the benchmark product, which is Sensex, with Friday expiry on May 15, 2023. So in less than 1 year, there is remarkable success in Sensex. And from a mere small turnover of 500 crores in its first expiry, Sensex has gained a lot of popularity, and the volumes are now moving onwards 356 lakh crores. I repeat, 356 lakh crores is the turnover from mere 500 crores. So it has been a remarkable journey, and I see most of the market participants have been actively participating in this. And so we thought of doing this webinar to make the risk management practices as well aware for the market participants. BankX we launched on 16th October 2023 with the Monday expiry, and that has also gained a lot of popularity. In BankX also, from a very small zero turnover practically to now we are doing 110 lakh crores in BankX. So there are two indices, derivatives contracts, which are being actively trading in BSE. Next slide. So this is the turnover journey of Sensex from practically say mere 500 crores to now 356 lakh crores, which resulted in 49 crore contracts and a premium turnover of 27,500 crores on a single day. And the OI is 74 lakh contracts on that specific date. In BankX, in BankX, we did turnover of 110 lakh crores with premium turnover of 7,600 crores and a number of contracts of 20 crore contracts. So that has been the remarkable journey of Sensex and BankX. Next slide, please. These are the key milestones which we have achieved in Sensex and BankX, and the most important point is the open interest. Open interest is considered as a barometer for the strength of any product, and this gives a detailed overview of the OI journey from practically open interest of 2 lakh contracts to now 86 lakh contracts peak OI on the expiry day. So that has been the journey of open interest. That itself shows the strength of the product of Sensex and BankX. In Sensex, it is 86 lakh contracts, and in BankX, we are having the open interest highest peak open interest of 22 lakh contracts. So next slide, Yunus. When we are seeing this high traction in the equity derivative segment, where we are seeing multi-fold turnover in the each of these products like Sensex and BankX, where the orders, trades, the latency, everything matters. BSE has been doing a lot of transformation in the IT network side as well. So while we have launched this product, we have also added the co-location space. We've also made a lot of changes into the technology health. In terms of addition in the co-location space, we are continuously upgrading our co-location and have been continuously adding the racks. Uh, in terms of the new thing which we have introduced is we are the first in India to launch full rack with 15 kVA power capacity. So as a market practice in India, you are getting the max peak capacity of power. It is 6 kVA. BSE is the first to launch full rack with 15 kVA power capacity in co-location, and the same shall be live from April 15th, 2024. And those members who are willing to apply for this 15 kVA power capacity, they can apply for the same through our BFS portal. In terms of the technology upgrade, BSE has also consistently increased the order processing capacity and also the trade processing capacity. This could have not been done without addition of partitions. So BSE has also added lot of partitions in the trading systems to support this increased order flow and increased trade flow. Next slide. Now coming to the today's topic, which is the risk management functionality, which has been introduced by BSE. BSE has already discontinued the stop loss market functionality. BSE has further introduced the market price protection range and limit price protection range, which is going to be applicable from 16th of April. Next slide. So when we talk about the discontinuation of stop loss market effective October 9, 2023, the exchange has discontinued the market order functionality for the stop loss orders, which practically helps to curtail the erroneous orders placement. So that this has been one of the changes which have made in terms of the stop loss market order entry. Subsequently, effective February 12, 2024, BSE has also introduced the market price protection enhancement. So the market price protection was already there in place, but BSE has made a lot of enhancement in the market price protection. While doing so, the functionality says for the buy orders, it shall be up to the X% higher than the LTP. I mean, if the LTP is 100 rupees, the market price functionality will allow the buy order to enter up to X percentage only away from the LTP. And for the sell orders, it is below the LTP by X percentage. So that helps to curtail the market orders. So we have discontinued the stop loss market, then we've introduced this market price protection. Next slide. In the market price protection, one more added advantage which we have given is we have allowed the member or trader driven MPI order range. So the traders or the members, both, I mean either of them, if they want to specify their own range for the market price protection, then they can enter that specific range. And once that specific range is entered, that will supersede other values. So if the traders or members do not change this value, then the exchange default parameters will be for the option index. The range will be 20% of the LTP, subject to minimum of 10 rupees. And for future index, it will be 1% of LTP, subject to minimum of 100 rupees. So these are the default values set by the exchange. Similarly for option stock and future stock as defined above. So if a trader or a member does not define the values of in terms of percentage, then the exchange default will be applicable. And if the traders define their own percentage, then the higher of the exchange defined or the member defined, sorry, lower of the member defined or exchange defined values will be applicable for the market price protection. This is a very important feature to ensure the market integrity is maintained and the erroneous orders, which leads to vague price and vague trades, that is curtailed to a larger extent. Next slide, please. One more important feature we have just introduced is the limit price protection, which will be going live from April 16, 2024. So the exchange has implemented limit price protection mechanism in equity derivatives segment, and post introduction of this LPP, which we call the PRC framework, that is price reasonability check, will cease to exist. So there will not be any PRC framework for the market participants. Previous slide, please. Previous. Yeah. So, no. Next slide. Yeah. So PRC will cease to exist. PRC will not be applicable, and only limit price protection will be applicable. So now with these changes, we have market price control as well. We have limit price control as well. We have stop loss market control as well. So a major risk management framework now is in place that instills a lot of confidence amongst the market participants, and that will bring ensure the market integrity is maintained. Key feature in the LPP mechanism will be, in the options, a reference price is being taken into consideration. That will be 60% of the reference price for the options contract, subject to minimum LPP value of 30 rupees. So, for example, if the reference price, which is the last traded price, if it is available, if not, that will go for the theoretical price. If that the price is say 100 rupees, in that case, the upper range and the lower range for buyer as well as seller will be 60%. So for a buyer, the option range can be the lower DPR to 60% of the LTP. In this case, when we are talking about, it is 100 rupees. So 100 plus 60, that is 160. So for a buyer, the range can be low DPR to 160. For a seller, it is opposite to that, upper DPR to minus 60% of the LTP. So that will be the wider range. In this, the trades can happen. So the matchable range between both of them will be ideally 40 to 160, based on the current example which we see, taking LTP of 100. In this case, the matchable range comes to 40 to 160. So that will curtail a lot of erroneous orders coming into system and ensure the market integrity is maintained. Similarly, for futures, it is the 3% of the reference price for futures contracts, subject to minimum LPP range of 1.50. Now, how will this limit price protection behave? For the market opening, the underlying price shall be taken into consideration, or if that is not available, then the previous close will be taken into consideration for the market opening. During the trading hours, it will take various parameters into consideration, which are mentioned over here. Based on that parameters, the LPP range will be gradually getting relaxed or getting contracted. It will not be infinite increase in the LPP range. Based on the derived price, the LPP range will keep on increasing or contracting, and that will move into the band. So that will help the players to decide the fair price which is running in the market. If a contract remains untraded for continuous 15 minutes from the last reference price, in such case, the theoretical price based on the latest underlying price shall be taken into consideration. So that is an important point for the contracts which remains illiquid or not traded for 15 minutes. Next slide. Key points to note while we are discussing this, and we are getting this opportunity to have this webinar with this large gathering of market participants. LPP, market price protection, which we call MPP, and discontinuation of stop loss market, aims to protect against unusual trading activities and prevent erratic trades when the prior order is placed with outside the defined range. So a range will ensure that the orders are placed within the specific price band only. One important announcement for all the market participants is the mock trading session on LPP to ensure seamless transition and enable market participants to make understand about the LPP functionality in detail, the exchange has organized a mock trading session on 13th May, that is coming Saturday. April. Sorry, 13th April 2024, that is Saturday. So request maximum participants to ensure participation in the mock and look into various aspects of this framework. While this LPP functionality will be live from the exchange side, it is important that how it is being handled by the third party software vendors as well as the in-house software vendors. So third party software vendors and in-house software providers are requested to handle the changes related to the display of LPP range in their front-end terminals. In the exchange API which is being published, the LPP range are also being published if it has been configured appropriately in the front-end software. So the vendors as well as the now software vendors are required to make some changes so that the LPP ranges are being displayed in the front-end terminals and the traders or the clients do not face any confusion about the price range. So that has to be done at the vendor level. Second thing is related to the handling of order rejections, LPP order rejection message. So once these orders are being rejected, the exchange appropriately gives the display that the order has been rejected because it is outside the LPP order range. So that message has to be appropriately handled and been displayed in the front end terminals, so there is no confusion in this. So request third party vendors as well as now software vendors to minutely monitor the developments on this and make needful changes in then front end terminals for the display as well as the handling of the order rejection message. Having said that, exchange may periodically review this ranges, various measures like LPP, MPP, and the ranges and a new enhancement measures from time to time to ensure the market integrity is being maintained. Market participants are requested to implement these messages and measures in their front-end terminals and request to create maximum awareness amongst the market participants. So this is all from our side. We wanted to make all the market participants aware about the risk management functionalities which are being introduced by BSE and how effectively this can be implemented in their systems and how to handle them. We request all the market participants to create a lot of awareness on this aspect so that if they face any such rejections, they are well aware about the reasons for the rejection and then appropriately can handle it. Over to Eunice for any Q&A. Thank you, BBF, once again for organizing this webinar in such short notice. And thank you, market participants, for gathering in this large numbers in such short notice. Thank you.
Thank you so much, Oja sir and BSC team for giving such insightful information to our members. Now we are open for the questions. If there is any questions, members can raise their virtual hands and they can ask questions, please. Okay, there is a device, Samsung SMA3. You may ask your question, please. You may unmute yourself and you can ask the question. Please unmute yourself and ask your question, please. Any other question? Okay, Mr. CA Anuj, you may ask your question, please.
Hello.
Yeah.
Hello.
Yes, please.
Yes, regarding LPP functionality, my question is that the range of the LPP that would be broadcasted through feeds, right? Means the brokers are not required to display it in front end.
I request you to raise your voice. Your voice is not audible.
So the LPP range that would be broadcasted, the brokers are not required to calculate something, right? It will be broadcasted from the API.
Correct. So you have already answered this question. So you are not required to calculate this range. This will be published by the exchange, and this will be displayed to the market participants in terms of the overall range of LPP.
So the rejection will come from exchange itself. The order is passed.
Can you repeat the question, please?
The rejection will come from the exchange itself, right?
Correct. Correct.
Thank you.
Any other question?
Over, sorry,
Yes.
just a moment, please. Over and above what Ojas just answered, for the broadcast of LPP range, it will be disseminated by the exchange as and when the range keeps getting updated. However, the front-end trading applications, which is either developed by the vendor or in-house, they will have to make changes in the software to display it on their market picture or market watch screens to be able to see the range. Okay, the data will be sent by the exchange, but they will have to be set up on the screens, for which some software level changes would be required. Yeah, similar to that, the vendors and the in-house teams would have done it for the NSE market data broadcast of LPP range. So on similar lines, even the BSE broadcast message can be developed and set up on the trading terminals.
Any other query from member side, please?
Just to add, exchange has already published this circular in its Twitter handle as well. So request members to retweet the same or probably forward the same to their client base, so that there is easy understanding of this functionality and awareness of this functionality.
Oja sir, there are a few questions in chat box. Shall I read out, please?
Yeah, please.
There is a question: when will LPP be implemented in BSE?
So the implementation date is April 16, 2024, Tuesday.
Okay. The next question is: do we need to get approval for in-house CTCL after making changes in software for broadcasting LPP?
So this is subjective thing. Practically, there are no changes in the front end software. It is exchange functionality which is being published. So we can take it offline if required. I don't think that is there are many changes in the front end software, but we can discuss it offline.
Okay, the last question is how would we give up indication of BSE FNO trades for which our clearing is NCL?
Can you repeat the question?
How would we give up indication of BSE FNO trades for which our clearing is NCL?
Take up confirmation on the trading terminal.
So the first thing is post interoperability. The trade of BSE FNO and NSE FNO or any other segments are being cleared by the clearing corporations. The fund has to be kept with the clearing corporation for the clearing purpose. So if you choose your clearing corporation, that will do the clearing part. Coming to the, I understand, I mean, the question is little ambiguous, but I understand it is somewhere related to the CP code or custodian give up order. So while placing the order, the dealer or client, whosoever, can place the CP code, which will directly go to the custodian for the settlement.
Once it is taken up, status of whether it is approved or rejected will be provided on the trading terminals.
So once the order is being accepted, then the status will be taken and the appropriate margins will be released of the member broker.
Any other doubt? You may ask, please, members.
And just to add, for the benefit of all the market participants, BSE has already changed, I mean, discontinued market, stop loss market, and then introduced market price order protection, and now limit price protection. With all these three changes, the systems or the risk management are at par with other exchanges. So now the risk management are at par with other exchanges in terms of the functionalities.
There is a device PM. You may ask your question, please.
Yeah, this is Paresh here.
Yes, sir, please.
Sir, this is related to the question in continuation to the question of that NCL part, the custodian part, which is just partly cleared by Mr. Rajesh Shah. Would like to add, like to get the clarity on that thing further. See, the trades are happening on BSFNO on daily basis, but the problem is that, as you said, we are not getting any indication in the trade file, neither from BSE side nor from NSE side, saying that the give up has happened from the clearing corporation. Now, what happens, from the margin perspective, we are stuck with the trades of for BSE, particularly for the BSE FNO part, because nowadays it's like it's a clients are trading in BSE as well as at NSE FNO both segments, right? So for the margining from the margining perspective, we are getting perfectly for the NSE part, NSE FNO trades. Like all margin calculations and the release of the margin for the member, it happens simultaneously on the real-time basis. But partly for the BSE FNO trades, we are stuck. And in turn, we are stuck with our margin part with the clearing corporation too. So there, I would like to know how do I get those things clarified from BSE, or I need to do the follow-up with NCL, because we are not getting answer for that part.
Okay, so there are, I would take this question in two parts. The
Okay.
first part, where, once the custodian has taken up the trades and confirmed as, approved or rejected, whatever the case may be,
Mhm.
that status, so this process happens at the clearing corporation level. And once the custodians have confirmed it, then the status is conveyed back to the exchanges. Once we receive it, whether it is from NCL or from ICCL, we provide that record in the online trade dissemination facility, where you will get an online trade record where the trade status in the trade will be updated to either flag 17 or 18, whatever the case may be, 17 being approved and 18 being rejected. So that there, the BSE member can check the status, whether what the confirmation has been given by custodian. That is first part. Now, basis this process, what is the impact on the margin, the release of margin, or if there is a new position being built and therefore additional margin is blocked from the collateral, that picture will be available at the clearing corporation end. So if NCL is providing you with any risk management dashboard for NSE trades, on the same dashboard you should also be getting the status for BSE trades. whether the margins are applied or the margins have been released because of square up or whatever other case may be. So in that case, if you're not able to get an updated status of the margin basis your trading activity, you will need to get in touch with your clearing corporation to provide the same.
Okay. So what I understand from your flow chart is basically that once the trades are executed for BSE FNO, BSE sends the file to NSE, correct? The trade file. And once
Yeah.
the custodian, yeah.
Trades are sent real time to NCL if your clearing member is NCL, or to ICCL if your clearing member is with ICCL.
Okay, so there's no delay on that part. So
No.
post confirmation from custodian, the BSE gets the written file from custodian with a marking saying, as you said, 17 number or whatever maybe, saying that
Yes.
these trades are confirmed.
Approved or rejected, whatever the case may
Right,
be.
correct. And once it's those trades are approved, again a third kind of a file will be sent to the members with a tagging of say 17 as you said. But
that is through the online trade dissemination facility, OTD facility that we are providing.
Okay.
If you set that up in your office, then you will be able to receive that update of trade through the OTD facility.
Okay, so it's a altogether different API working on that part, OTD part.
It's a software utility that is provided by BSE.
Okay.
And if you're going to use it first time, you need to get in touch with the help desk, who will help you download this software utility, and also map your office machine IP address details, so that the data can be disseminated or sent to you whenever you log in through that OTD facility.
Okay, so this
and
will
once it's done every day in the morning, then you would continuously receive whatever trade updates, any new trade done, confirmation from custodian, modification, all these updates will keep coming to you.
Sure. So this is in addition to what we get it in RTRMS.
Yes.
Okay. Fine. So that probably clears my little, but I'll recheck and reconfirm with Aldes, and in case there's a query, I'll definitely write it. Thanks a lot.
Additionally, on the trading system, we also provide a drop copy facility. So if you are subscribing to that drop copy facility, you will also get this trade confirmation through that drop copy facility.
Okay. I'll recheck with my internal team.
Sure.
Sure. Thank you.
So there is a message in the chat box, how it will affect when someone selling any script or any FNO. Hello.
Can you repeat the query?
How it will affect when someone selling any script or any FNO?
So probably I am assuming that this query is related to the stock derivatives contract. Keeping that in mind, I'll answer this query because the question is little incomplete. In the LPP framework, we have also mentioned in the market price impact, we have also mentioned the range for the option stock, which is 20% of LTP or 10 rupees, whichever is higher. And for future stock, it is 3% of LTP or 1 rupees 50 paisa, whichever is higher. So that is already applicable for the market price impact range. And in the LPP framework, the options range remains the same, that is 60% of the options range or 30 rupees, whichever is higher. And for futures contract, it is 3% of reference range or 1 rupees 50 paisa, whichever is higher. So that is applicable for stock derivatives as well, the LPP as well as market price impact. One important update while we are discussing this point, one important update is related to the calculation of the reference price. So this calculation of reference price is being done at every 30 seconds, and the uh, current IV, or we say live IV, has been taken into consideration while computing this price, so that the price are aligned with the ruling prices and there are no issues related to the deriving of the range for the contracts which are getting traded. So request everyone to create maximum awareness through social media, through other media platforms which they are using, to create maximum awareness on all these functionalities for the awareness of the investors at large.
There are no virtual hands or any message, so shall we wind up then? If there is no something particular.
Yeah, from this side, we would also like to give one additional piece of information that in addition to the new broadcast of LPP range data, we are also started giving broadcast of implied volatility for the option contracts. So as and when trading activity happens, real time, the implied volatility will be calculated and provided as market data broadcast. Those members who are interested can make changes in their trading application software and subscribe to this implied volatility market data, and can use it for trading activity.
Yeah, so in this related to BSE FNO, in case we have some queries or doubts, may be required for either developing our in-house software or to get more clarity, whom should we contact?
So you can note down the email IDs. The email ID is iml.info@bsindia.com, and the other email ID is bse.tech, bse.tech@bsindia.com. So iml.info@bsindia.com and bse.tech@bsindia.com.
Okay. So we can write it, or we need to either can we have the numbers of these related persons who can solve our queries, or should we write the email for that?
Yeah. So the contact number is 2272
Okay.
8053
Okay.
on the technical aspects.
Okay. Okay, because that is required, because we are facing some of the other issues while developing.
2272 8053. Yeah. Additionally, if they want to contact the relationship manager, they can contact the relationship manager as well.
Yeah.
There are no questions or any virtual hands. Hello, Ajay sir.
Yeah. Okay. So thank you once again, BBF and the market participants, both joining for this event in such a short notice. Thank you all.
Thank you so much, sir. Thank you so much, entire BSc team, for conducting such kind of a webinar. We look forward in future also for conducting these kind of collaborations. Thank you very much, everyone.